Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Wednesday, 6/20/07. Couple of things going on here. Looks like we got some kind of a setup taking place with the S&P and the NASDAQ. We're right here at this topping area. I've shown you charts in the past where if we do not get follow through, we get 3 down days. NASDAQ made a new contract high Friday and Monday, but no follow through Tuesday, so I expect Wednesday down, Thursday down. That's the way it usually works. And when you find something that works, you go with it every time. Sometimes you get faked out, but if you use it every time, the averages come your way. With that set up in mind, that we're right there, right in that formation with the NASDAQ and S&P. So we're going to try to stay short for that second, third day drop. Let's see what we get out of that. I'll come back to you with that in a few moments. But I wanted to bring up a couple of different things. Point A, it's 4:30 a.m. and I'm coming to you guys now. My Omni went out a little while ago and the video is being created. Now, I've had some questions in my forums and some emails sent to me, and people are wondering why the Omni doesn't come out at a specific time every evening. Well, traders, the markets are not on any sleeping schedule. They're not on your schedule. They're not on my schedule. When they want to produce a signal, they produce a signal. There's nothing that I can do about it except for monitor the markets and wait for the signals to come out. Sometimes it's 5 in the afternoon. Sometimes it's 5 in the morning. Tonight it's 4:30. But that's what my job is. I wait until those signals come out, and then I present them to you. So the answer to is there a time that we can count on when the Omnis and videos come out? Absolutely not. I wish the markets would work around my sleeping habits, but they don't. They don't have a sleeping habit, and neither do I. And you Omniacs should be insomniacs like me, and you shouldn't have any sleeping habits either. But here we are, 4:30 a.m., looking to see what we can do in these markets. The one thing I can say about this topping pattern in NASDAQ and S&P is this. If, in fact, we make a new contract high today and the trade doesn't work, that likely sets up our pattern, and we will be able to, we'll know where we're going Thursday and Friday, and it should be an easier trade. So either way, I mean, hopefully, of course, I hope it works out and we come off for day 2 and 3. If not, and we do get stopped out, then at least we know where we're going for the next 2 days, and we should be able to capitalize. So that takes care of these two guys for the moment. Okay, the grains contest. Well, you know, I've been looking at this for a while now, and I've been reading your emails and your posts, and I must say, it looks like the beans and the oats have to be the winners here. Now, as far as percentages are concerned, you guys were beans 60%, wheat 30%, and oats, oats only had 10% of the vote. My vote, the way I see it, oats could very well be the one that does it, but I must go with soybeans myself. Traditionally, it would be soybeans. Looking at weekly charts, soybeans has the best pattern to take off from here. Wheat's already started a bit. But again, going out to a weekly, which is what we would do when we want to project ahead a week or so, or a month or so, or 2 months, you have to look at a weekly chart. I've looked at all the weeklies and monthlies, and I must say I have to go with the beans and possibly oats. So, hey, guys, that contest was great. Thank you so much. Thanks. We had dozens and dozens and dozens, in fact, hundreds of replies. So thank you, guys. Again, out of all those replies, 60 in the beans, 30 in the wheat, 10 in the oats. Let's see what we get. Okay, a couple of emails that came across. I'd like to get to them. They involve a couple of charts. So I'm going to read an email, maybe 2 of them, and then I want to do charts on those emails. And then we'll take a look at the numbers and see what we're going to do tomorrow. Okay, I got an email. Mr. O, do we have a possible outside reversal set up on gold after today's chart was finished, after today's bar was complete? Just one of you students trying to learn. George. Shout out to you, George. Thank you so much. We do have an outside day, and I'll show you that in a chart right now. It's not a reversal, but likely a continuation pattern. Take a look at this chart, and I'll get right back to you. So, George, your question was, is this an outside reversal day setup which is something I had shown you guys in a chart a couple of videos ago. I've shown it to you a few times, I would imagine, but a couple of videos ago I had given a demonstration of what one would look like. Well, this one is likely a continuation pattern because, yes, it is an outside day, meaning today's high or yesterday's high at this point was higher than the day before. Yesterday's low was lower than the day before, but we settled up higher than the previous day's high. That is an outside day. Now, is it a reversal? Only if we were moving up and then we settled lower, which would be opposite the general direction. Lately, the last 3 to 5 days, we've been in an up move here. We settled higher, so it's an outside day continuation pattern, not an outside day reversal. But hey, very good question, and I hope you make some money on that trade. So take a look for a possibility of the gold going a little higher. Okay, so George, you saw that. Look for continuation possibly in the gold. Next up, I've been in bonds since 105.30. Nice trade. You're long, obviously. Very good. Since 105.30. Sold one for profit and have 2 more. But was wondering what could be a good way to play this. Throw a 4-day moving average out and buy the dips. Just looking for some ideas. Scrap Daddy. Hey, Scrap Daddy, thanks for the question. Well, I have a chart for you. I think that you're in a great position. I think that the market looks strong here for at least the next few days in bonds. And there's likely, the likelihood is that you should probably put your stops in 2 days. Well, I'll show it to you in a chart. How about that? Let me do another chart illustration for you, and I'll explain to you what I would do to ride this trade. Take a look at the chart, and then I'll come back to you. So, Scrap Daddy, here we are. You're long bonds from the 105 area. Nice trade. So now we're here, and you're wondering what you should do. Well, it looks like we should at least complete the pattern and test this area above 108. So I would likely stay long. If it was my position, I would probably stay with it. There's a couple of ways to play it. I would take 2 days ago low, and I would place my stop below 2 days ago's low from wherever we are now. So if we're settled here, I go 1, 2, and place a stop here. Tomorrow, when we open up and we're higher, I go 1, 2, and I place the stop here, and I follow it along with the trailing stop until I reach an area where I think we're topping out. Now, once you get to the area where you think you're topping out, if you think the area is 108, sell the 109 calls against your position. Take in some premium. At worst, if you're wrong, you give up the trade at 109, and if you're right, you get to take in some of the calls before you get out of the trade. So you have your stop in, maybe you move your stop a little higher at that point, sell a few calls against your position, and see what happens. That's the way I would play it. And good luck to you. I hope you do very well. The chart looks good. Technicals look good. So, you know, I'm assuming that you should be okay for the next few days here. So, again, Scrap Daddy, thank you for the email, and good luck on your bond trade. Okay, so you guys seen the chart on the bonds. I think the bonds look strong here. And, again, if you're in a position where you're long and the market has already taken off and you got a fat profit, when you reach an area that you think we're mushrooming out or topping out, sell calls against your position, move your stop up, and whichever one gets hit first. Of course, if your stop gets hit, get out of your calls, take in what premium you can. If the market never goes higher and just drifts around up there, your calls will get cheaper in value. You'll take in more money, and at some point you can unwind the whole trade. So that's my advice on what to do when you're in a trade and it's already blasted off in your direction and you don't have too much fear of getting stopped out with a loss. Okay, webinars, I've mentioned them to you in a few videos. We are this close to producing them. I have done lots of work on it. I've tried out our room. We're getting very close. The site's being retooled so that we can bring these webinars to you. Be patient, a few more days, a week, maybe less, and we should be able to produce those webinars. The format change is coming your way where these trade recommendations will turn in more or less to general direction recommendations with possible profit targets. We'll talk about that. I will get you ready for it over the next few days. I won't do it all at once, but it is coming, so be prepared. Okay, for tomorrow, 6/20/07, Wednesday, ESU7, SPU7 in the S&P. Omni's resistance 1552.75, 1553.75. Market is just about there now. It's probably 1.5 bid, 51.5 bid at 52. So get your orders in. The Omnis are already out. You should have gotten them a while ago, so make sure you've got your orders placed. And of course, if you're going to get in, try it on an MIT market of touch basis. Omni turns neutral if we get above 15.57.75. Now, what does that tell you for you, my Omniacs, my regulars? 52 get in, 52.75, 53.75 is where you're getting in. With the 57 stop, look how little that stop is for my usual Omni. One of two things. We're flipping to go down or blast off for new highs in a bigger way. It's not a call, it might go up, might go down. That's a ridiculous thing to say. But when stops get tight like this, it means volatility and a volatile move, either up or down from this direction. But we've noticed almost always it's a turnaround. Let's see what we get. Omni's profit objective, if we get lucky and we drop, is 15.33 to 15.32, or be out MOC market on close, which is 4:15 Eastern Daylight Savings. Okay, for you traders who have stayed short with me overnight, I would suggest placing your buy stops about $1 to $2 above previous contract highs, which are 15.57.75. We're short on an average of 47 if you followed me, maybe 48 depending on where you guys filled yourselves. Stops go above $2 above 57 and we should be okay. New contract highs tell us wrong, wrong, wrong. 3 and out won't work and we're going to take off for the rest of the week. So be careful, be nimble with your trading there. Have your stops in place. All right, NASDAQ, another red Omni. Hopefully we'll get what we want. ENU7, NQU7. Omni resistance 1973 to 1974. Omni turns neutral if we get above 1981. You traders following me from last night, have your stops, just follow this stop. Even though you're short from last night, follow that same stop. Omni's profit objective is 1951 to 1952 on the downside if we get so lucky. Or be out MOC market on close. Again, that's 4:15 Eastern Daylight. If you sell 73 to 74, stops are above 81. Don't forget, don't throw it right there at the level. Now we have gold, and that's a green one, baby. I like the greens, like I always say. Gold should be going up. I just showed that to you in a chart that we are. It looks bullish from where that chart stands now, as well as being above the 200-day moving average. On top of an outside day continuation pattern up, we should get some up move here in gold. Omni support 660.20 to 659.20. Currently trading around 663. Have your orders in. Omni turns neutral if we get below 654. You're buying 660.90 to 660.20 to 659.20. Below 54. Think about placing a stop. Omni's profit objective is 669 on the upside. However, a settlement above 669 in gold augurs for a move to 677, 679. So if we could settle above 669 tomorrow, probably another $10 run. Let's take one day at a time here and see what happens on that. Okay, I think I've covered just about everything that I had planned for you guys. It's getting late, so I got to get this video out to you before the next thing you know, markets open on us. I'll be here manning the phones if you'd like to give me a call about any of this. 718-351-2266 anytime you'd like. Kindly go to my website, www.livewithoscar.com. Fill out a registration form to get yourselves on the Flash Updates database. This way I can give you my subtle changes to my orders, my resting orders throughout the day. Do your homework, ladies and gentlemen. Always do your homework. You see, I do my homework. I do it every evening. I want you guys to do your homework, and part of this format change will certainly help you, or at least give you the catalyst that you need to get off your butts and do your own homework. You got to do it every night. Do it every day. Compare your work to mine before you take any of these recommendations. Guys, you want to shoot me out emails? I'm here, oscar@futuresanalysts.com. And good luck trading today. Remember that we're at this topping pattern, as I've said, with this S&P, so keep your eyes open here. It's do or die at these levels. And don't forget, place your stops first. All the time, place them first before you place your entry orders. And the rest of this is simple. And you know what I'm going to say, right? Make sure you say it with me, and that is, stops are in, emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.